Well, good afternoon, everybody. And if I was to tell you that my favorite TED talk is the one by Susan Cain about the power of introverts, you can imagine what I'm thinking looking out at you now. Not only that, I have to follow people playing ukuleles and I have a teddy bear next to me. But let's give it a shot. I want to talk to you about social activism as well, not hacking, but how social activism can be enabled through capital markets. I think the title of the TEDxLiverpool event today is a really important one, particularly in the context of the last few days, the future we want to create. And we aren't going to create any sort of a different future unless you think about how you can get control over how capital markets operate. That would just be silly. The good news is you can. Each of you can. But you have to participate. This is not a spectator sport. Unlike TED. You're all on stage. You all have to participate in the way that capital markets change for sustainability and for social good. And I hope to explain in the next few minutes how you can do that. And as Herb said, it's happening quite close to here. And maybe a good place to start is to say the capital markets weren't always so distant as they feel now when you read the headlines on the news about billions wiped off pensions and things like that. In 1945, there were 45 stock exchanges around Britain. Glasgow, Birmingham, Liverpool. Liverpool Stock Exchange was founded in 1835. It was based in Tithe Barn Street. It had a trading floor there until '86. And the great businesses of Liverpool's expansion were financed there. So from the beginning of the cutting of the canals in the 1790s, the creation of the mills, the railways of the Northwest, including the financing of what was called the Grand Junction, which is what joined up the railways of Liverpool and Manchester. That was all done here. It wasn't done in London. In fact, it's a little-known fact that the railway that connects the Northwest to London, which of course is nowadays such a hot political topic, the railway to London was financed in Lancashire. It wasn't financed in London. And in fact, most of the railways that got financed in Great Britain and then afterwards on the continent and further afield in the Empire were also financed in Liverpool and Manchester. It became an area of extraordinary expertise. And the investors were private people. They were local people. They weren't institutions. They were normal people. And they were able to buy shares and hold them in very small sizes, which was critical because it made it democratic. It meant that the ownership stuck and that the dividends got paid to normal people who were participants in the market. So I'd like you to think about that idea of how Liverpool operated in its great expansion in the 19th century and into the 20th century. I'm not from Liverpool, I'm from Northumberland, and so I was taken by my dad to the floor of the Newcastle Stock Exchange, which still existed when I was a boy, which tells you how old I am. And I was very struck by it because my father, who was a journalist, explained to me a concept which has stayed with me until this hour, which is the secret of the public market. Would you like to know the secret of the public market? Yes. The secret of the public market is this, and I don't think it's sufficiently well understood. You are, as a member of the public, entitled to be quoted the same price for any security on a public market that is quoted to a money centre bank or a life office or a fund manager or a pension fund, even if you're only buying £50 worth of stock. By law, it's called the best price rule and the best execution rule, you are entitled to be quoted the same price as Goldman Sachs or UBS or Deutsche Bank or any of the money centre banks. There is no other financial asset where that's true. Imagine saying somebody's about to buy £10 million worth of structured products or debt, and then saying, I expect to get the same price as him. You'd be laughed at. So it's an amazing thing. That secret of the public market is an amazing thing that stayed with me, obviously, because it has shaped my life. And when I first started playing with the internet in 93, 94, it had obviously stayed with me because the first thing I thought that it was logical to do when I discovered the first web browser was to build a website to publish share prices. Clearly, this is the obvious thing you do when you discover the internet. My lord. But I decided that the obvious thing to do with the internet was to create a website publishing share prices. And it was the first in the world. And we went to the London Stock Exchange and we managed to get a trial price feed so that we could publish prices in real time. This was in 1994. In the spring of 1995, so still pretty early, you see, we ended up putting the site live in delayed prices, and then in real-time prices, we put the site live in September 1995, and I got the shock of my life. I've just come down from university, by the way, and I got sued by the London Stock Exchange. Because somebody told the London Stock Exchange that if the prices were live on the internet, then they were now free, and that they would lose about a third of their revenue because obviously they sold those prices to Reuters. What they also said was, why do non-professional users need to have access to real-time share prices? That's interesting, isn't it? Because it's a public market. Aren't we all members of the public? But what's this? There's a definition of professional and non-professional user, and apparently only professional users get to have share prices in real time. You can all settle for getting share prices at the end of the day at 6 p.m., because that's really useful, isn't it? You can trade against that. But that's because you're non-professional users. We had our price feed pulled. I've just come down from university. I'm being sued by the London Stock Exchange, clearly about to go bust. However, we managed to get the press on our side, and we fought a negotiation for a month. And in October 1995, my price feed got turned back on. And to this very day, if you're checking share prices on your mobile phone, it's because of the agreement that I negotiated, which means that you get 20-minute delayed share prices for free, and you can buy real-time share prices for a monthly fee. So with our share price feed reinstated, obviously, we were able to start a business again. And we managed to get up to 250,000 unique users by 1997. 250,000 unique users was a lot in 1997. We had quite a lot of users from the British Telecom Research Laboratory at Martlesham Moor, because they were the only people with a fast enough internet connection. Everyone else was still on 28.8 dial-up. So we were very early. And that company, which was called Electronic Share Information, was acquired by ETrade and became ETrade UK. You may have heard of it. I started another company then called Interactive Markets to finish the job, if you like, because if you've published prices and you've published research, the next logical thing to do was to start a community, which was to enable other people, everybody, you and I, to participate in markets by sharing the data that you discovered in your researches with everybody else and allowing everybody to express their view of security. And I started the trading side because at that point, the prices that were being published for retail investors weren't tradable. They were indicative. What it means is that you're not guaranteed to be dealt at the price which is being quoted to you. It's in the ballpark. Well, that's not good enough, is it? It's not what professional users get. So we created a system in 97, 98, which meant that you were then able to quote a price, and as long as you executed within the designated hold time, which we negotiated with the leading market makers, you're guaranteed to be dealt at that price. And again, if you trade stocks and shares in the London market today, or not today, tomorrow, you are still using a system which is based upon the agreements I negotiated with market makers back in 97, 98, which is that they have to execute within the price as long as you execute within the hold time. So, access to a public market. Access to a public market is critical. We built up that business to the point where it could be floated. And so 5 years after I've nearly been bankrupted by the London Stock Exchange, I was invited back into the London Stock Exchange to float my company and to be given a brass plaque, which was lovely. What was interesting was that we wanted our retail investors, the users of the website, to be able to invest in the stock, and they couldn't, because the banks that were advising us, you know, people you may have heard of, like Credit Suisse and Salomon Smith Barney and Donaldson Lufkin Generate, who you would expect to know what they were doing, had absolutely no ability to deal directly with retail investors. In fact, one extremely toffee-nosed banker turned around to me and said, "Mr. Carruthers, you do know these are Tier 7 clients." That's us, right? We are Tier 7 clients. That's how important we are to the financial services industry. So we built another system which enabled us to do a public offering online. And we got 150,000 investors to participate and to become shareholders in Interactive Investor when we floated in February 2000. The next month, I got telephoned by Brent Hoberman, and lastminute.com was coming to market, and they said, "We'd really like the users of our website to be able to buy shares in the company rather than them all going to institutions. Can you help?" So we did a retail offer for them, and 230,000 people bought shares in lastminute.com. So this is beginning to work, right? We did about another 30 offers. In fact, the last one I supervised was for a social network company based in Palo Alto called Facebook. I think you'll probably be familiar with the product. And that was the only way in which, if you were a UK investor, you could participate in the public offering. So I've given you the concept of a public market. I spent most of my career thinking about how normal people, how you and I, can get access to public markets and use public markets. And of course, I was trading my company with 8 million unique users and 200,000 clients into 2008 and into 2009 when the global financial crisis happened. And I think what that exposed to all of us was that some very, very bad things had been going on, and that the practices of business and banking had become effectively predatory and antisocial. And in some sense, in 2016, we're still living with the consequences of the predatory and antisocial behavior of business and banking. I think trust has never been as low in business as banking as it is today. It hasn't recovered. And one of the reasons is that they still want to operate in their little bubble, which treats retail investors, because we're retail investors, we're tier 7 clients, and we're non-professional users. Even though the public capital markets are only supposed to exist for us, they still want to behave as if the public doesn't participate in markets. So I got very interested then in the question of sustainable business and what could be the alternative model, and this is what I want to finish with today, because this is how you can help, and I want your help in order to make this work. If you do the research into businesses which care about sustainability and about pro-social impact, it turns out they're actually much better investments than buying the FTSE 100. And all the research shows that. I don't have the time on this stage to share it with you today, but I'm happy to speak afterwards. Now, isn't that an amazing fact? The businesses that are good at sustainability and good at social impact turn out to be better investments than businesses that don't care. Isn't that completely the opposite of what you're told? That there's some version of capitalism read in tooth and claw which is more effective at generating financial returns than sustainable business. It's wrong. Sustainable business is a much better way of doing business, and they're much better investments. But you don't get to hear about them because institutions, conventional finance, doesn't care about anything other than financial return. The only people that are going to make any kind of difference here by demanding the ability to invest in pro-social businesses are you. And in order to enable you to do that, I have created a new stock exchange, a social stock exchange, which will only admit companies which can demonstrate that they are pro-social in their purposes and that they are running sustainable businesses. And it is expressly created with the purpose that normal people, tier 7 clients, non-professional users, all of us can buy shares in these companies because we're aligned with the purposes of the social entrepreneurs who are running them. And we care about the fact that their businesses are pro-social and that the businesses are sustainable, because this is the future we want to create, right? Where business is integrated into society and serves society rather than being parasitical upon it. And it can only happen if you participate. But if you do, then we have a real crack at changing the world, because that armature that's created by the social entrepreneur and the impact investor together is what is creating new economic growth, new jobs, new activity. And I'm excited to say that we already have members from the Northwest. We have members in Warrington and in Sheffield, and we have been spending the last 4 months researching the Greater Liverpool City area. And we believe that there are at least 50 companies in the Greater Liverpool City area that would meet our criteria for social investment, and we've been speaking to a number of people around the town who are interested in being the first social impact investors in this market. I'll be making announcements in Liverpool in the next few days about how this pilot will look, but we believe that we could go back to what was best about that idea of the 19th century, which was that capital markets were embedded in a community, together with what's best about, well, some of the work I've been doing in my career as a technology entrepreneur, some things that you'll be familiar with now, which is the idea that it's all in the cloud, that the trading floor is digital, that it's open to anybody to participate, and critically, as I said, in the role of the public market, that you get the same price as an institution, that there's a level playing field. All I can ask of you is that if you do want to change the world, you participate in this new market and help me make it a success. Thank you very much.
Can I ask you a question?
Shoot.
Does it depend on the question? Right. First off, you said Something about how basically pro-social businesses are actually better investments or something along that line. Is that right?
That's true.
Now, how can that possibly be? How can it be that a business that lives to make profit, no matter what it does, can exceed a business that is seeking to make a sustainable profit whilst also achieving something else? What's going on there that allows that second company, the pro-social company, to outperform a company that is only hell-bent on making money?
There's loads of things, but let me pick three. One of them is employee engagement. Okay. Companies that have got management teams that are just focused on quarterly results and short-term results tend to have a much more disengaged workforce. That's a surprise. Versus companies which are focused on the long term, which tend to be much clearer about their strategy, which tend to have a much more engaged workforce. That's one reason. Okay. In general, long-term investing generates better returns than short-term investing. Mm-hmm. So you want a management team and a board that are focused on that. Okay. And sustainable business tend to be better at that. Okay. And then thirdly, you have what's called the black swan effect, which is the businesses which are just trying to make profits tend to cut corners. And you know, we have a great example in the last 6 months with Volkswagen, don't we? So here's a car manufacturer that becomes the biggest car manufacturer in the world by lying about the impact of the diesel engines that it puts into its vehicles. Okay. And of course, you know, prospectively, half the market capitalization of Volkswagen's been wiped out by the effect of the admissions that they've had to make. So that's a black swan effect. Mm-hmm. So actually, yeah, counterintuitive as it might be, in conventional financial terms, sustainable businesses are better investments. Interesting.
Okay. I guess, oddly, businesses focusing on sustainability maybe of an environmental kind may actually be inherently more sustainable businesses unto themselves.
Absolutely.
Yeah. Okay. Fantastic. Now, why? You know, obviously, part of the idea is this idea about regionalization of the stock exchanges, of these of capital and things like that. Why not just leave it all in London, where we've already got a wonderfully vibrant and thriving capital market down there? Why not just leave it there?
Because I think for my theory of change, capital markets need to be embedded in communities again. The capital market needs to serve the community, and that is not going to happen based in the City of London. That is not what the City of London is for.
Indeed. Okay. Thomas, thank you so much. Thank you.